everyone, it is Evan here from thetraderisk.com on Saturday, September 24th, coming to you late and coming to you with a condensed stock market weekly analysis video. So I got hit with something, cold, flu, bug, fever, maybe COVID, I'm not sure, but it wiped me out on Friday, and I was just feeling super crappy, could not get our usual stock market weekly video out. So feeling a bit better today, 24 hours later, and so I figured I'd fire up the charts and just do a condensed price action only one, because it was an important week and lots going on. So I wanted to at least touch upon a couple of things I'm noticing, looking at, and just how I'm thinking about this market looking ahead. And we're just going to look at 5 charts today and keep things pretty tight, and back to schedule next week on track per usual. So on last week, September 16th, when we did our usual long-form market video, we sort of talked about the path of least resistance being lower here in the market. And we really sort of keyed off of, just to keep things simple, as one of the points we talked about was this weekly bar here on the S&P 500, all majors pretty much. And we had pretty much this textbook bearish engulfing weekly bar last week, where we had the opening price on the week was above last week's highs, and we closed lower than last week's lows, setting up this nice 2-bar bearish engulfing pattern. And then we drew sort of a impulse leg down here from the highs in August to the lows on this measured move, and we projected it down. So basically just a symmetrical move, 2-legged move down, and that got us perfectly to kind of the June lows as a reasonable target or expectation if the weakness were to continue. Now, lo and behold, of course, everything's usually not that neat and orderly and perfect, but 1 week later, here we are, almost 5% down in the S&P 500, and basically completing that measured move and retesting the June lows. So, and we didn't quite fully retest, but pretty close. So everybody's sort of looking at this now saying, is this the bottom? Are we going to bounce here? Is this where we can safely buy? And there's kind of 2 scenarios. There's 3 scenarios, I guess, I'm looking at for next week. I'm going to start with the picture perfect one, or the one that I would hope we get next week. And obviously the market does not care about what I think, but I think from a trader's perspective, it's the cleanest and perhaps the easiest, is accelerated weakness. I would love to see the market gap down Sunday night futures and really just put in a panic-driven early start to next week. A gap down or some substantial weakness that would break us below the June lows, do it on heavy volume, and finally get, one of our charts here, the VIX to spike in a very meaningful sort of capitulative way. Now, I will say it was nice to see on Friday the VIX finally start to break out of this range. And again, I'm not a big fan of traditional technical analysis on the VIX per se, but while this sell-off had been essentially increasing on the downside here for equity markets, we really saw the VIX struggle to hold above 27. Not to say 27 is not an elevated reading, but we couldn't really get it to continue to make new highs with the market. Friday, we finally saw that finally come unhinged a little bit, where there was some actual panic going on and there was some, demand and rush for protection. I would love to see that continue. So I would like to see the VIX break above Friday's highs, get into the mid-30s, potentially even make new year-to-date highs for the VIX, while the S&P 500 breaks below the June lows. I think that would set us up for a nice, durable, cleaner bounce. I think the bounce is still going to be difficult to obviously nail the bottom of, but I think that could put us traders in the short term looking for that mean reversion, looking for that bounce. That would give us a little more confidence to show that the capitulation and the wipeout is here. As it stands, even right now, as we went into the week, pick your oversold measurement, whether it's percentage of stocks below a certain SMA, or percentage of stocks that are in RSI oversold territory, or put call ratio, which is over 1.2, or S&P 500 futures, the net positioning there. Everything shows that this market is in the already beaten up and extreme kind of oversold conditions. But these are the exact conditions that markets get more oversold in. So it is very difficult to just want to trade on that exclusively. That is why I would love to see it coupled with some accelerated blow-off capitulative sort of price and volume volatility behavior. So that, again, would be the perfect scenario if we could get a 1, 2, 3 day max kind of pain event early next week. The second option here, or the second way I see, the markets, which is probably the least likely, is us just consolidating here in this choppy mess, in a choppy range near the June lows. So basically, let's just say that the S&P, trades between 3,600 and 3,700 for 4, 5, 6, 7 days in a row, where it just kind of chops and moves sideways here. That would also set us up for a nice sort of tradable move, because we would have some structure to finally, look for another leg down or look for that reversal up. That would be a good scenario as well. I think that's kind of the least likely. We've got lots of Fed speakers just as one catalyst for next week. We've got basically a tour of Federal Reserve members speaking next week. So I think it's almost every day. So I'm sure there's going to be some market moving catalysts or headlines hitting the tape throughout the week as well. So that's probably going to cause some volatility. The third option is kind of coming into this grind up or some type of bounce early next week, where the futures open up and the market starts to bounce from these levels. That's probably the trickiest scenario to trade. That's going to be a place where it feels like the markets are unsettled or haven't completely put in that capitulative sort of move. And so if we get a bounce here, it's going to put the market in a weird spot where, did the June lows just hold? And now people have to quickly decide if they want to bid this market up if we start to, rally for a couple of days, or is this just another bear flag, which is going to take us down lower? That will be something we'll have to assess as we go there. Again, I think that's, unfortunately, it's a realistic or it's a higher probability than probably just moving sideways here, but it's probably the toughest one to trade. So in a nutshell, that's kind of what I'm looking for here. Those are kind of the roadmaps or what I'm looking for. We know we have oversold conditions. We know the markets are ripe for a bounce. It's just trying to now come down to timing, of course, and trying to prep for how the markets can open up next week. If I look at the Nasdaq here, again, didn't quite get down to the June lows. Would love to see that firm retest there. And going forward, I think we've got a good line in the sand here to use. June lows, are we above it? Are we below it? What markets are holding, what stocks are holding above their June lows. There's a relative strength play. You can start to now drill down in between sectors and individual stocks to basically look at relative strength and see what's performing versus those lows back in June. So I think that's something as traders we can all start to start doing some homework for. VIX, I already sort of talked about that in terms of what I'm looking for there. See if we can get that blow off. Nasdaq volatility is up around 35 right now. Would love to see that into the 40s to mark some type of bottom. And finally, the 10-year yield. So we did see a nice reversal here. We closed well off of the highs for the 10-year yield. So if this continues, if we get follow through lower here, maybe that is some early indication that the market has, sold off enough, or the market has priced in enough, and we can, put in some type of more meaningful bounce. But this is sort of a secondary measure, which I'm just loosely keeping an eye on, along with the dollar. And so forth. So that is it. Lots more to talk about in terms of sectors and individual stocks, but I'm going to leave it there for this week. Hope to be back in normal rotation next week with a lot more data and studies to help us navigate this market. So if you want to learn more, you can usually check us out at thetraderist.com/SMW. That's where we post our usual market analysis videos. Thanks so much for tuning in. Hope you have a great weekend. We'll see you back here next week.